Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indexes. So we have a big move tonight with the Dow Jones Industrial Average up nearly 2%, S&P 500 up nearly 2% as well. The Nasdaq is up over 2%, so it's the big gainer. And then we have the Russell 2000, which is up big, but it's lagging behind, but it's up 1.6%. And then we have VIX, which is dropping. So a big move. And also, oil is breaking away. Check out crude oil. And then you have Brent up here making a huge move as well. And then natural gas is starting to cool down, but it's still trading in a tight range. So let's look here at the indexes. The dinner went well over the weekend. There's been positive comments out of the White House and out of China. And so, it looks like a truce for the next 90 days. And that is bullish for the market in the short term. And so, we're going to see here if we can get this December rally going. The first thing I want you to know about all the indexes I'm going to show you here is that they are breaking above 50 on RSI, and so you want to see them stay above 50. At 54 here for this is the S&P 500. It's got plenty of room to run to that 70 overbought level. So if it can stay bullish here, this could be the start of a push higher. Okay, so Fasto now is above 80. It needs to stay above 80. If it dropped back below that signal, it's cooling down. Okay, tomorrow we should get plus DI here, the green line crossing over the red line minus DI, and then you want to see it cross over the black line 80X, and that would be a clear signal the bulls are taking control. If you look here, it looks like this a W double bottom reversal pattern. You've got a nice W pattern here with the horizontal resistance right now lined up with the 100-day simple moving average, and so that is going to be the key level to break along with the closing price here on the 7th of November. And so keep an eye on that level. That's the big level, 28.14. 28.14, 28.15. It's going to have to trade above that level to head higher. Right now, last time I checked, it was at 207, 2807, and so it's going to need to another 7 points higher, and 7-8 points higher, and it's going to be hitting this key resistance zone. What you're looking for is a close above resistance. It's going to have to bust through this upper Bollinger Band at 28.20. If it could do both of those things, then you could see it rally higher, possibly come up here and test this 286 resistance zone. We'll just have to see. It stalled out here in October and then on the bounce in November, and so it's going to be right back at that level tomorrow. And so keep in mind, it's going to have to close above that level and turn it into support to head higher. Also, notice it closed right below the 200-day simple moving average. That's the red line there at 2761. It's going to need to turn that level and the green line, which is the 50-day simple moving average at 2775, into support to head higher. There's going to be a big gap up open tomorrow. All right, so look at the volume spike. People were loading for this. The candles are now above the middle Bollinger Band there at 2722, and it signals the possible start of a new uptrend. It just has to break through that 100-day simple moving average and turn it into support to head higher. Okay, take a look at SPY. This is the Spider S&P 500, and it has the same chart pattern. You have RSI here at 54, so it has plenty of room to run to that 70 overbought level where it tends to stall out at. Fasto is now above 80. That's a signal of the possible start of the next push higher. Now, if it dropped below 80, that would be a sell signal. It would signal downside risk that the chart's cooling down. Now look at the close on Friday above the descending resistance line. That close above descending resistance and above the red line, that's the 200-day simple moving average at 27 or 274.40. That signaled more upside potential. That was a buy signal. That was a signal that it wanted to head higher. Now it needs to stay above those levels to head higher. Now it's also, look at the green line there. That's the 50-day simple moving average at 277. You're looking at a gap up open above that level tomorrow, and then the big level to break is going to be the horizontal resistance level and the 200-day simple moving average, basically at 280. Okay, 280.60 is the exact level to break, and if it can break above that level, basically 281 is the high close. And so what you want to see with SPY is trading above 281. If it stalls out at 281, that could be a temporary top. Notice how this was the top in October and November. It's going to have to close above and turn it into support to head up there to that 287 zone. Okay, let's look at the Dow Jones Industrial Average. So we're looking at a big move tonight. Keep in mind, RSI is only at 54. All right, so it's just heating up. Look, it's had runs well above 70, so it has plenty of room to push higher. Fasto still below S80. Tomorrow it's going to be above 80, and it's going to need to stay above that level in order to remain bullish. Now look at the volume spike once again. People were loading. People were anticipating this bullish move. They were anticipating positive news over the weekend, and it did come through. So congrats everybody. The green and gold lines are going to be key levels to turn into support. That's the 50 and 100-day simple moving average. Tonight it's way up here at 26027. Okay, so that's putting up with this closing price back here in early November, and then it's really going to be all about 26200. So tomorrow, if the markets are rocking, they're looking at, like right now, possibly a 500-point open tomorrow. If the Dow was able to tack on another 200 points, let's say it's a really big day and it's up 700 points in the day, watch 26,200. If it hits that level and stalls out, that could be a temporary top. It's going to need to close above that level and turn it into support to head higher. Just above that, check it out, is the upper Bollinger Band at 2630 and 26,300 basically. And so that 26,200 to 26,300 is going to be a crucial resistance zone. Notice how it was the top of the previous run, and so this whole zone right here is where it could find a temporary top and then possibly stall out. You just have to be prepared for it. If it closes above that level, that's where it could break out higher. Okay, let's look at the Nasdaq here. Yeah, the Nasdaq is heating up as well. Everybody knows how beaten up it's been. So we could have the FANG play back in, the FANG trade back in play heading into into the end of the year. We'll just have to see how it plays out, but this is very promising with the huge move for the Nasdaq tonight, up over 2.25%. Look at Fasto, closed above 80. So the chart's heating up. Now it just has to follow through. And so the close on Friday, once again, above the descending resistance line was the signal that it wanted to head higher. It also closed above that 300-day simple moving average. So that was a bullish close on Friday. There was tons of buying into the close on all the indexes, especially leading into the close. And so that was a bullish signal that people were anticipating good news over the weekend. And so what you're going to see is a gap up open above these moving averages. That's the 50 and 200-day simple moving averages. You want to see the high close resistance levels break. You've got the high close right here back on the 7th of November, and that's lined up here with that upper Bollinger Band. It's going to be all about breaking this 75.86 resistance zone. If you can get above that, then you have the high close from back here on the 16th of October, which is lined up with the 100-day simple moving average at 76.76. So keep an eye on that level, 76.76. It's going to have to break that level to keep pushing higher. It could stall out at one of these high close horizontal resistance levels. Keep in mind, the upper Bollinger Band here at 7586, basically 7587 is the top of the channel, and so it's going to have to bust through that channel to head higher. Many times, it's starting. The run was starting from way down here on the 20th, below the lower Bollinger Band. So going from below the lower Bollinger Band all the way up to the upper Bollinger Band could be a climax kind of event, or at least a temporary top. So you have to be prepared for that. If that does happen, what you want to see is this 200-day simple moving average at 75.18 hold. It's going to need to turn that 200-day simple moving average into support to head higher. Back in November, when it got above that level, it failed to hold and it pulled back. And so that's going to be the line in the sand. So keep an eye on it. Okay, let's look at the QQQ here. This is what a lot of people like to trade when they're trading the technology stocks, trading the Nasdaq. And notice how it just got above 50 back on Friday. At 52, there's a ton of room to run here. You look at Fasto just above 80. This is a very good sign that the chart is heating up. Also, that there's a new uptrend that started here, that potentially started back on Wednesday with the close above the dotted purple line, which is the middle Bollinger Band at 166.85. If you load on a break above the middle Bollinger Band and support holds, that's a good entry point because you got there at the start of the uptrend. Now back in November, there was a head fake. It closed above the dotted purple line, which is also the 20-day simple moving average. That level failed to hold and it pulled back, so it's going to have to hold that level. Now with the futures up, there's going to be a big gap up open above the 50 and 200-day simple moving averages. Now you want to see those levels hold. This is one scenario that could play out, and it looks like it's kind of across the board. The 100-day simple moving average for all these indexes and the upper Bollinger Band are going to be the crucial levels. They all, this is computer trading at its best. They all have very similar patterns, right? And so it's going to be all about breaking through that 100-day simple moving average at 176.83. If that level fails to break, that's going to be your temporary top. Notice it's lined up with that upper Bollinger Band right around 176. And so what happens is if it hits that level, and let's say it fails to break, and then it starts to pull back, what we want to see is 172 hold. As long as it can hold 172, then it has a potential to break out higher. Now, fail to hold 172 and it's going to consolidate. There'll be a big gap to fill below. It's all about horizontal resistance, the high closes here, and notice how they're both lined up with the upper Bollinger Band and the 100-day simple moving average. That 100-day simple moving average is going to be a biggie. You know, that was the top here in October on the bounce, and so it's really lined up with that. You know, basically, if Triple Q can start trading at 177 and above, that's going to be extremely bullish. If it stalls out at 177, look for a possible pullback to 172. If that level held on a pullback, that could be a good entry point for a trade, okay, for a bounce off of that level. Yeah, so let's look here finally at the Russell 2000. The small caps, they're doing good as well. They're just lagging behind. They're not doing as well as the other indexes. They've been under pressure. Seasonally, December and January, or the end of the November and December are seasonally not good times for the small caps. A lot of people sell them off into the, sell their losers. A lot of people are down on these small caps. They've been down, holding bags or whatever from higher levels, and they unload them with tax loss selling. And many times, just seasonally, the small caps don't do great during this time of year. It's just something to keep in mind. And so they're lagging behind. Also, the big risk trade was the small caps. When the market was firing, the small Russell 2000 was leading the way, and so it makes sense that it's lagging behind. But interestingly, the technology sector is doing much better than the small caps, and it's probably more of a seasonality type of thing than anything. That's just my take. What we have now is RSI at 51, and so it needs to stay above 50. If it dropped back below 50, it would signal it's cooling down. At 51, there's a lot of room here until that 70 level. Once again, notice how it closed just above 80. So these are your clues here. The chart's heating up above 50, above 80. What we want to see is this plus DI cross above minus DI, the green line above the red line. That signal it's heating up. Now, last week, a new uptrend is trying to begin on Wednesday, once again, with the close above the middle Bollinger Band, which is also the 20-day simple moving average at 150, 157. If that level holds, a new uptrend should continue. And what we're looking for now, and notice the descending resistance line. There's a lot of resistance stacked up here, but it's going to be all about getting through the zone, basically between 155 and 157.50. That's going to be this huge resistance. You have horizontal resistance. You have descending resistance here. You have the 50-day simple moving average, the green line at 155. You have the 300-day simple moving average at 156. It's just a lot of resistance between 155 and 157.50. If it can break above 157.50, which is also lined up with that upper Bollinger Band, what you're looking for is a test of the 200-day simple moving average, basically at 160. Notice just below that, though, you're going to have to get above the high close here on the 16th. This is just going to be a real tough zone to get through. Now, if it can bust through this week, turn the 50 and 300-day simple moving averages into support, stay above 156.50, get above 160, then you're looking at, once again, that 100-day simple moving average. It's a much further away target for the Russell 2000 since it's been under more pressure, but it's going to be all about working its way back up to 162. All right, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. It's going to be a big week for trading. It's going to be all about following the charts and then being prepared if they hit resistance and stall out at one of the levels that was discussed in the video. All right, thanks a lot for viewing.